Hello, in this episode, we're going to talk about why are your medical claims getting denied and some of the hidden reasons behind lost revenue. Hi, my name is Samara V from Graverty-Solutions. At Graverty-Solutions, we are a revenue cycle management team focused on medical financial health. Imagine this, a physician spent 30 minutes with patients carefully documenting everything, performs the right procedures, submits the claim, and 30 days later, the payment arrived. Except it doesn't. Instead, the practice hits with a denial. Now, someone in your billing office has to spend another 20, 30, sometimes even hours figuring out what went wrong, collecting the claim, and hoping the insurance company pays the second time. Now, here is the shocking part. Nearly 1 out of every 3 medical claims is getting denied on the first submission. That's not just paperwork. That's delayed revenue. Now, you have frustrated staff and practices is struggling with cash flow. Today, we'll uncover the biggest reasons why claims getting denied, explain what those confusing denial codes actually mean, and walk through real physician case studies and share proven strategies to reduce denials before they happen. So let's get started. So why do you think claim denials matter? Back in 1929, a school teacher in Dallas, Texas, paid 50 cents a month to guarantee hospital care if she becomes sick. That simple idea became Blue Cross, the world's first modern healthcare insurance plan. At that time, there was no CPT codes, no ICD-10 diagnosis, no electronic claims, and certainly no prior authorizations. So a doctor treats a patient, a hospital sends a bill, and the insurance company paid. Fast forward nearly 100 years later, today a single medical claim can contain hundreds of data points. And one missing modifier or incorrect diagnosis code can cause automatic denial. So how did we go from simple hospital bill to a system where nearly 1 in 3 claims get denied? That's exactly what we're uncovering today. Every denied claim starts with a chain reaction. Instead of being paid within a few weeks, the claim enters a lengthy appeal process. Across the United States, claim denials cost healthcare organizations an estimated of $262 billion every year. Billing teams spend nearly 19 hours every week per employee simply fixing denied claims. So, why claims remain unpaid for 45 days or longer, increasing account receivables and hurting cash flow? And patients, more than 2/3 of your patients become confused when they suddenly receive an unexpected bill because the insurance denied payment. Claim denials aren't just an administrative problem. They are a financial problem. They are a patient satisfaction problem. And they are a practice survivable problem. So what are the 7 most common reasons for claims to get denied? Let's break down these biggest denial categories. So 1, eligibility issues. This is one of the easiest denials to prevent. Imagine a family medicine clinic seeing a patient whose insurance expired 2 weeks earlier. Nobody checked eligibility. The visit happened, the claim is submitted, denied immediately. Why? Because the physicians did everything correctly. The billing staff did everything correctly. However, because the coverage wasn't verified beforehand, nobody got paid. So simple electronic eligibility check could have prevented the entire problem. 2, prior authorization failures. Now imagine this. An orthopedic surgeon scheduled an MRI. The office assumed authorization was already approved. What if it wasn't? The MRI is completed. Now the claim is denied because the prior authorization was never obtained. Now the staff must either appeal or write off thousands of dollars. One missing authorization can erase the profit from multiple patient visits. 3. Coding errors. Coding mistakes remain one of the largest source of denials. Maybe the CPT code doesn't match the diagnosis. Maybe the ICD-10 code isn't specific enough. Maybe the documentation supports a level 4 visit, but a level 5 code was submitted. Insurance companies compare coding with documentation electronically. Even the smallest inconsistencies trigger denials. A cardiology practice noticed that nearly every week they were receiving denials for one specific procedure. After reviewing their claims, they discovered the physicians were documenting their services correctly. However, the code is consistently missed an important modifier. The results, hundreds of denied claims. After providing the target code education and implementing a modifier checklist, denials for that procedure dropped dramatically with 2 months. So sometimes the biggest improvement comes from fixing one recurring mistake. So 4. Medical necessity. Insurance companies don't simply ask whether the procedure was performed. They ask whether it was medically necessary according to their policies. So if documentation doesn't clearly explain why the patient needed the service, payment may be denied even if the treatment was clinically appropriate. Good documentation tells the patient's story. So number 5 is duplicate claims. So sometimes your staff members believe a claim never went through, so they submit it again. The payer sees these as 2 identical claims and automatically denied one as a duplicate. So tracking claim status before resubmitting prevents unnecessary denials. Number 6, modifier errors. Modifier errors are tiny codes with huge financial consequence. In 1934, poor Richard Almanac Benjamin Franklin wrote, "For want of a nail, the shoe was lost. For want of a shoe, the horse was lost." This lesson is simple. A tiny missing piece can lead to much bigger failure. In medical billing, the tiny missing piece is often the modifier. Just 2 characters can determine whether the claim is paid, denied, or delayed. So, missing modifier 25, using modifier 59 incorrectly, applying the wrong surgical modifier. Each mistake can cause claims to get rejected automatically. Many practices lose thousands simply because modifier rules change frequently. Number 7, documentation problem. If it isn't documented, it didn't happen. Incomplete notes, missing physician signatures, insufficient operative reports, absent medical necessity. Insurance companies won't pay for the care that they cannot verify. So, understanding denial codes. When a denial arrives, many providers immediately feel overwhelmed. The remittance advice contains mysterious abbreviations like CARC, RRC, COPR. These are codes that need to be cracked. So, claim adjustment reason codes explain why the payment changed. Remittance advice remark codes provide additional information or instructions. CO adjustments represent contractual obligations. So CO adjustment codes are usually provider write-offs based on the payer contract. PR adjustments indicates patient responsibility. These deductibles, co-insurance, or non-covered services. Learning to interpret these codes quickly help your billing team to resolve denials. Know who to reach faster instead of guessing what happened. So what my advice to all practices is, don't just fix denied claims. Study them. Ask questions like which insurance company denied the most claims? Which physicians has the highest denied rate? Which CPT codes are denied most frequently? Which office location performs worse than the other? For example, a multi-specialty clinic discovered that one location had denial rates 22% higher than every other office. So the problem wasn't the physician or the insurance companies. It was inconsistent front desk eligibility verification. One workflow change reduced denials significantly. Data always tells a story. So a couple of months ago, a specialty physician practice came to Graverty-Solutions with months of growing account receivables. Denied claims were sitting untouched and cash flow had nearly stalled. So our denial management team categorized every denials by pair. So root cause, recovery potential, we corrected coding issues, submitted appeals with supporting documentation, and implemented front-end eligibility verification along with weekly denial trends reviews. And within weeks, the practice recovered a substantial portion of previously unpaid claims, and they reduced AR aging. So what happened is they created a map that significantly lowered future denials. So the lesson is simple. Treating denials as data, not disasters, creates a lasting financial improvement. So, how do we recover denials? So, every successful recovery follows the same 5 steps. First, identify denied claims within 24 to 48 hours. 2. Categorize them pair by pair, denial reasons and likelihood of recovery. 3. Correct coding, documentation, billing errors. 4. Appeal legitimate denial using strong clinical evidence. Finally, prevent future denials by improving workflows. The goal isn't just getting paid today. The goal is prevent tomorrow's denials. So always build a denial prevention program. You can go far by figuring out the road, but you can keep moving safe when you have a plan and a map. So the highest performing practices, billing departments, revenue cycle teams, focus on prevention. Verify insurance eligibility before every visit. Validate prior authorization before procedures. Conduct routine coding audits. Provide ongoing staff education and automate as much as possible. Technology can verify eligibility in real time now, detect coding conflicts before submission, and identify missing documentation before claim ever reach the payer. The cheapest denial is the one that never happens. So if you're a physician, practice administrator, billing manager, here are the 5 actions you can start this week. Engage leadership in reviewing denial trends regularly. Create a cross-functional denial review team. Invest in denial management technology. Track denial KPIs every week, not every quarter. Build a culture focused on continuous improvement. Your goal should be simple. Keep your first pass denial rate below 5%. Resolve denials in under 30 days. Achieve an appeal success rate about 65%. Remember, claim denials are not inevitable. Every denial has a cause. Every cause has a solution. Every solution protects your revenue. Thank you for listening to today's episode. If your practice is struggling with denied claims, aging account receivables, or increasing payer rejections, Graverty-Solutions offer a free AR audit to help you identify hidden revenue opportunities and build a stronger denial prevention strategy. Until next time, keep your claims clean, your documentation complete, and your revenue cycle healthy. This is Samara V from Graverty-Solutions. I will see you soon. Bye-bye.